we are trading day of the month. What a start to H2 2024. Let's see how the market chose to tie activities together for July. This, of course, is Market Pulse on News Central in partnership with Nairametrics. Welcome. I am Joanna Mustapha, your host. And on the show today, earning results. We're focusing on all three of the notable breweries in Nigeria and the slew of losses that's been recorded by them. Also, the race to March 31st, 2026 is on. FCNB joins the race. Zenith Bank is on its marks. I believe they'll kick it off tomorrow. And also their reactions in the fixed income market. A day before the planned protest, average yield on Nigeria's sovereign Eurobonds are facing sell pressures in the international market. But first, let's gauge reactions on the equities market. The market is closing in the red for the month of July. Further decline today. There was an increased selling pressures on banking stocks specifically, as well as consumer goods stocks in the wake of earning releases. We can see the all share index down 0.06%, 97,774.65. That's what we're seeing. So turnover volume of about 1.84 billion shares today. Top gainers, industrial and medical gases topped the list there, gaining 10%, 14 Naira 30 kobo. We're seeing them top the list together with University Press and Veritas Capital Assurance. They all gained 10% as well. All three of them 10%, sharing the first position on the top gainers. Coming to the top losers list, Beggar Paint and Kutix. They posted significant losses along with NACO. They all declined 10%. I don't know what's going on with the 10%, but yes, all three of them in as top losers. 10% decline, Beggar, NACO, and Kutix. We're seeing that happen there. One of the losers we have our eyes on is Nigeria Breweries. They lost about 9.82%. We're taking it investors were spooked perhaps by the losses recorded by the company in the first half of the year. We'll have that conversation on Pulse of the Day. If you come to the top movers, over 1.33 billion shares of Fidelity Bank were traded, making them the top movers for the day. There was also significant investor interest or disinterest in Zenith Bank, as about 83.9 million of its shares were traded. We're seeing it there, second place as the top traded stocks for today. Coming to the currency markets, are we going through this cycle all over again? The Naira is inching closer and slowly approaching that 1.7 ceiling. Midday data shows that the Naira exchanged for about 1,661 Naira to the dollar. But we'll definitely keep our eyes out on that. So not exactly a great way to end the month of July. But joining me for Market Breakdown after this break is a founder, CEO of Asha Investment, Mukhtar Mohammed. So stay tuned. All right, this is Market Pulse. Right now, we're picking up the pulse of the day on three of the largest breweries in Nigeria. International Breweries, Nigeria Breweries, and Guinness Nigeria. They've released their earning results. Nigeria Breweries announced a 116.34 billion naira loss before tax in H1 2024. If you compare that to the 67.84 billion naira in H1 2023, you can see the differential there. International Breweries financial results for Q2 recorded, for Q2, yes, 2024 recorded revenue at 119.98 billion from the 61.73 billion in Q2 2023. Gross profits is sitting at 33.76 billion, up from 20.44 billion in Q2 2023. Finally, let's come to Guinness. On the other hand, they put a full-year pre-tax loss of 73.6 billion naira, a 233% decline from the 22.1 billion recorded in the previous financial year, but also witnessing revenue appreciate by 30.5% there. So joining me now to break down the data and provide insights is the founder and CEO of Asha Investments, Mukhtar Mohammed. Delighted to have you in.
Thank you for having me.
It's always a pleasure. Thank you for being here. All right, International Breweries, they recorded a pre-tax loss of 61.81 billion naira. That's the headline. And yes, it's a decline from Q1 losses, and FMCGs, they have had a lot to grapple with. But International Breweries has been recording pre-tax losses since 2017. So are there concerns about their escalating losses over the past 6 years? And how much of a threat do you reckon this poses to the brewery's profitability outlook?
Well, there's big concern because at 2017, we're not even where we are today in terms of challenges of FX. And those losses have continued up till now. And if you look at it, is sometimes when you look at international brewery, especially, you see that their sale is always up, but their losses sometimes has to do with their running capital. And remember that at the point they were thinking of coming to the market to raise more funds. And so what we are seeing now with these current losses, we are seeing almost a wipe off of their entire, almost a wipe off of their shareholders' fund, which has been in continuous decline. So it calls for big concern, especially if you're an investor in Nigeria International Brewery, because that has not given you joy. You look at the current result, the present results half year, you realize that it's not that they didn't make profit compared to what they made last year, but the losses this year is even understandable because of the FX challenges.
Right.
But all other years, you tend to have challenges with what happened in the company.
Yes. Can you imagine how investors, are feeling about that right now? But then we've seen that their strategy has been to raise capital to plug the losses, right? Since 2020, they have been to the market twice for capital restructuring. Most recently in May, they opened rights issues of 588 billion naira. What do you make of their attempt to convert this debt to equity? And do you see it keeping the company from bankruptcy and placing it on the path to profitability in the long run?
Well, in the long run, I think it will work. If they need to do a lot of port cost measures to be able to do that, and they have to also look at assets that they have that are not even bringing in so much profit. Right. Like you said, they've been to the market twice. That they are doing the right issue. Their largest shareholder seems to be acquiring more of the right issue than the retail investors. So it's more of the right issue normally go to the institutional investor. But when you look at that, that really excites shareholders. I don't think you have excited shareholders ever since they were listed. It was not like a company that was paying dividend. Then you begin to ask, okay, fine, what happened? If you remember, they actually came to the market for the first time, and they did a public offer, which was less than, I think, about 60 kobo at that time. It was oversubscribed, and they returned funds to investors. I think it's only those investors that invested at that time would say that we've enjoyed capital appreciation. In terms of dividend payouts and everything, has been very poor. So when you look at that, there's concern. But about bankruptcy, like I said, the results still look good in terms of their sales and profit. But again, they need to work on it.
Yes, indeed, and that dividend drought there. But AB InBev, we know that is a majority shareholder. They have 78.44% holding of International Breweries. Some have argued that their strategy in Nigeria is to prioritize market share acquisition over profitability. Do you agree? And what does this spell for minority shareholders in the long run?
Well, if you look at, like I said, from 2017 up to date, nothing seems to be happening. And again, even before then, there was nothing really happening. And then you might both agree with what they are saying. But again, in their divestment, I think a lot of retail investors is just about something percent. We also have some, maybe they have to pay them or whoever is buying it, and or if they want to divest from Nigeria. Because again, that also has to look at the exchange. If the exchange have a rule to stop them, we saw the exchange doing that in some companies of recent. That is, I think is the Unilever of reason why they say they cannot delist at the price. So that could just be the exchange that will come in there and save investors if this is their plan. But again, when you look at the kind of money they have been investing, they somewhat believe that there will be a turnaround. I don't think it's something to really worry about, but the worrisome issue has to do that up to this moment, they've not been able to come out of the wood.
All right, we seem to have a little break there, but hopefully we have you back soon. And I think you're here, right? Do we see a change in the ownership landscape ahead for international breweries as we have seen with Guinness Nigeria?
Well, I wish I have a crystal ball to look at that, but like I said, they really invested so much in Nigeria. And if you look at the Guinness changeover, it's a plus for the investors because they bought it at 81 naira from the previous investor. So if they are divesting today, then the retail investors will still have 80 something, depending on how much you bought it. But again, when you look at this stock, these were stocks that were selling all-time high at 400. So then they went to their lowest. I think Guinness went to its lowest to 15 naira. After that, we see an upside to about 99 naira before currently going down to 50 something. Then when they took over, when the new owners came in, we saw it move to about 61 naira. And if you look at that 61 naira, by what the new owners invested per unit to exit, then they still short about 20 naira. So hopefully, I don't see other companies trading those lines.
Okay, fair enough. Let's come to Guinness Nigeria now. We know that Singaporean firm Tolaram is betting on Nigeria amid that multinational exit, right? And they have picked up the commanding role in Guinness Nigeria. But Tolaram has no experience in brewing, and most of its Singaporean companies are not listed, right? So in the light of all this, what are the possibilities of a future delisting of Guinness Nigeria, and how is all this driving sentiment around the stock?
Well, like I said, the good thing is if you are going to delist them, you can't be paying lower than what you pay the institutional investors. And so definitely retail investors that bought at a low, maybe those that bought when it came down to 15 or 15 naira thereabout, or those that bought at 30, those that bought at 50. It might just be concerned because from 15 it went as high as 96. So that's where the concern will come for those that bought at that price, because again, ever since that period, they've not been able to pay any fantastic dividend, because this is a company that normally is one of those high-paying dividends stocks, and they pay virtually all their profit to investors. And we might just wait to see how it plans out. But if they are doing any divestment, I think they won't pay the retail investors lower on what they paid the majority investor, which was about 81 naira. So it's a plus.
Okay, wait and see. And you're saying it would be a win-win even if they do delist for shareholders. Thank you so much for joining us, Mukhtar Mohammed. It's a pleasure having you in, the CEO of Asha Investments. All right, up next, the banks take the spotlight. FCNB and Zenith Bank, they have made announcements on recapitalization. David Olujimi joins me to break down the facts and the figures. You're tuned in to Market Pulse, and of course the spotlight today is back on the recapitalization exercise. Ahead of this exercise, First City Monument Bank Group PLC yesterday at its facts behind the offer presentation at the NGX announced plans to raise 397 billion naira in 3 phases. On Monday, a public offer over 15.1 billion ordinary shares of 50 kobo each at 7 naira 30 kobo per share. Alongside the public offer, the group will be conducting a private placement of $40 to $50 million, which will close by the end of the year, and then they'll convert it to ordinary shares by 2025. And in addition to all this, the group will also sell a minority stake in its pension and credit direct business to raise at least 90 billion naira, which will be injected into its bank subsidiary. That's for FCNB. Also, Tier 1 bank Zenith also announced plans to sell rights issues and public offer to investors beginning tomorrow, 1st of August, in a bid to raise 290 billion naira. So Zenith Bank is selling 5.2 billion ordinary shares of 50 kobo each at 36 naira per share via rights issue and public offer of about 2.7 billion ordinary shares. And yes, in reaction to this announcement, investors dumped the bank's shares yesterday. David will tell us more about what happened today, but let's get into it. David Olujimi, financial markets analyst with Nairametrics. He's with me now in the studio. Hello, David.
How are you doing, Joanna?
Yes, I'm fine. Very well, thank you. So what's your assessment of FCNB's three-pronged approach to raising capital in the market? And do you see this giving them an edge, right, in the market, you know, with the scramble in the market right now for capital?
So basically what we've seen with FCNB is a case of the bank is one of the smallest banks to have an international banking license. They need to raise 397 billion to hit the 500 billion naira mark before March 2026. They have just one international branch, FCNB UK. But one thing with FCNB is that FCNB is a group that existed as an investment bank before it ever became what it is today. So everybody knows First City Monument Bank. But before that, there was CSL Stockbrokers, and there were so many others. Now they run a couple of subsidiaries. They run Credit Direct, one very important piece of their business. They run FCNB Pension, and they have these businesses that are doing exceptionally well. Amongst the banks with international banking license, FCNB has subsidiaries that are doing better than other groups with subsidiaries. So basically, there are three-pronged approaches. Okay, apart from just going into the NGX, okay, let's look outside. We have this, we have that. They are planning to sell minority stakes in Credit Direct, which is one consumer lending business that, as I was saying, when we were discussing earlier, I talked about the fact that this business is a model for other banks who want to go into consumer lending.
Right.
So it's one of the most profitable fintechs in the country. As these, with all of the fintechs we have, Credit Direct has established itself as one of the most profitable fintechs in Nigeria. So they have this, and they have many more. So I feel it's a good strategy. It's very different from what we've been seeing so far.
Yeah. Another thing different about their strategy is the fact that they're not using a combined rights issue and public offering. What do you think is the reason behind this for FCNB?
So one of the reasons behind this is what we've been seeing with the rights issues and public offering. Their CEO said something about he doesn't want a strategy that will lag on too long. So we see rights issues, we see the cases of banks are now selling shares at higher prices. Rather, normally we'll have a system of discounted prices in the rights issue and public offering. We'll have a case where they will have to do a lot of marketing, come and buy. We've seen Access Bank using Twitter influencers recently to advertise their rights issues. So I feel like they just decided that, okay, let's just do something. Public offers are some of the most seamless and simplest systems. Right. First of all, stakeholders don't need to be shareholders when you do a public offering. Anybody can buy shares for their 5-year-old, their 10-year-old. Right. Anybody can do it. So it's a system where let's just do something where everybody can be welcome into the FCNB family. That's the way I see it for them. Okay,
let's come to Zenith Bank now.
Okay.
They also made an announcement, and we saw reactions almost immediately in the market. The share price dropped almost 3%. Yeah. What's going on in the mind of an investor?
So one thing I've seen with these banks, I've seen this thing with Access, and I'm seeing it with Zenith. They put their pricing above the market price, which is very, very, I don't know, it's very shocking to see. For example, with Access Holdings, we saw the chairman try to explain our shares are undervalued. We have a situation where our earnings per share is this, and all of these are just figures. At the moment, the pricing in the stock market is what the investors value your share at. Is what investors say, okay, this is what I'm willing to pay for this share. Pricing your rights issue at 36 naira per share is like, oh, you have two eggs, and I say, oh, you have 2 eggs, you bought these 2 eggs for 16 naira, 13 naira a piece. Okay, now come and take one extra one for 14 naira per piece. What do? You go to the market and buy an additional one for 13 naira per piece. So there's a lot of...
We're seeing that anomaly.
So I probably think that these banks feel like all the dilution of their shares, the dilutive effect of the recapitalization announcement has come and gone. So they feel like, okay, now it's time to just, we are the ones that are now going to determine our share price value. But the market is saying otherwise. All
right, we'll see whether or not the markets change their mind. And of course, share your sentiments on X at Nairametrics. There's a poll up there. Let's get a feel of where you're at as regard this. Thank you, David, for the breakdown. Up next, African markets. We're going to get into it. Of course, it's a mixed performance. The NSE, Nairobi Stock Exchange, they broke their run, right? Their bullish run on the exchange, but everyone else was in the green. NSE is down 0.61%. Right, that's about it, right, on the show today. And There we have it for the month of July. Tune in tomorrow for the latest updates across the markets. It will be interesting to see how they react, especially with the scheduled protest for tomorrow. We're also seeing average yields on Nigeria's sovereign bonds face sell pressures in the international markets yesterday. We'll continue to keep an eye out on activities of the day, 4 p.m. West African time every weekday. Market Pulse here on News Central in partnership with Nairametrics. Now to the global markets. Bubble sound.